Now that the governor has concluded his actions on bills that landed on his desk, it is time to look back at some of the work we've been able to accomplish together. Of course, there was a major loss on AB 257, the bill that creates an untrained, unaccountable council to impose new laws on a major segment of the restaurant community. That issue isn't over yet, as signature gatherers are on the street gathering signatures from voters in order to take this issue directly to the voters. But back to the just concluded legislative session. Earlier in the year, the state was swimming in unanticipated and historical levels of tax revenue from the state's highest income earners, along with capital gains taxes and federal relief funds given to state and local governments. Neither California nor any other state has ever had so much extra revenue flowing into its coffers. Amazingly, there were still a surprising number of tax increases introduced in the legislature that received serious consideration by lawmakers. Ultimately, those bills died due to the opposition work of the CRA and other employer groups and partners. Among the most damaging tax increase proposals were Assembly Constitutional Amendment 8, which would have established an entirely new wealth tax on all forms of personal property or wealth and would have lowered the number of votes needed to pass such a measure. Assembly Constitutional Amendment 11. This one proposed a gross receipts tax for businesses, payroll tax increases for employees and employers, penalizing employers for adding people to their payroll as we emerge from the pandemic, along with increases to personal income tax rates. This one, too, sought to change legislative rules by lowering the number of votes needed in the legislature to approve massive tax increases like these in the future. Now, I know, stopping these proposals while the state is being flooded with enormous amounts of unanticipated tax revenue seems like a no-brainer and easy. Unfortunately, it is not, and takes active, steady engagement to convince lawmakers not to allow these proposals to move forward. But with your help, we were able to collectively stop these and other tax increase proposals. Speaking of taxes, let's talk tax relief real quick. When the federal government issued PPP loans and grants in Round 1 and Round 2, along with the restaurant revitalization grants, California recipients of those federal funds were going to have to pay state income tax on those relief dollars. Well, again, with your help, we were successful there too, with $6.2 billion worth of tax relief for previous PPP recipients, and another $500 million for those lucky enough to get restaurant revitalization grants or shuttered revenue operations grants. So in each case, the CRA jumped into gear and lobbied hard with your help to stop massive tax increases on multiple fronts. That's the news you need to know. I'm Sabrina. Thank you for watching.